Top 2 solar stocks to invest in for 2021. The clean energy industry has enjoyed investor optimism over the past year. Rising demand globally as economies gradually transition toward carbon neutrality proved to be a significant tailwind to the sector. Governments worldwide have pledged to reduce carbon emissions. The United Kingdom, for instance, aims to eliminate carbon emissions by 2050 and China plans to become carbon neutral by 2060. Guided by the forthcoming Biden administration, the United States is expected to seek carbon neutrality by 2035. These factors have helped the clean energy industry to significantly outperform the broader market. The First Trust Nasdaq Clean Edge Green Energy Index Fund, QCLN, has gained 181.5% over the past year. In comparison, the tech-heavy Nasdaq Composite has returned 43.9%. As the global economy recovers from the COVID-19 pandemic, a long list of countries is expected to invest heavily in clean energy to begin a systematic transformation across industrial sectors. Companies such as ENPH Energy, Inc., ENPH, and SolarEdge Technologies, Inc., SEDG, have already undertaken strategic expansion plans to penetrate the international markets, and we think they are well positioned to gain in 2021. The stock is also ranked number 5 of 19 stocks in the solar industry. SolarEdge Technologies, Inc., SEDG. Headquartered in Israel, SEDG manufactures and sells photovoltaic DC current-optimized inverter systems globally. Its product lineup includes power optimizers, inverters, monitoring software, and solutions. The company also provides after-sales and technical support. SEDG raised $550 million through senior notes offering in September, which is expected to fund its business operations and expansion plans. The company launched a new Energy Hub inverter with Prism technology in June, which can charge smart energy devices up to 200A. SEDG's revenues rose 2% sequentially to $338.10 million in the third quarter ended September 30, 2020. This can be attributed to a slight increase in solar business revenues to $312.50 million. Its non-GAAP gross margin increased 110 basis points sequentially to 33.5%, while non-GAAP operating income improved 7% from the prior quarter to $50 million. Its non-GAAP EPS grew 24.7% sequentially to $1.21. Analysts expect SEDG's EPS to rise 15.4% next year, and at a rate of 20% per annum over the next 5 years. The company has an impressive earnings surprise history as well. It beat the street EPS estimates in 3 of the trailing 4 quarters. A consensus revenue estimate of $1.74 billion for fiscal 2021 represents a 19.6% improvement year-over-year. SEDG gained more than 400% to hit its 52-week high of $335.80 this month since hitting its 52-week low of $67.02 in March. It is no surprise then that SEDG is rated strong buy in our rating system, with an A for trade grade and buy and hold grade, and a B for peer grade. It is currently ranked number 1 in the same industry. SEDG shares were trading at $317.03 per share on Thursday morning, down $2.07, minus 0.65%. Year to date, SEDG has gained 233.40% versus a 17.55% rise in the benchmark S&P 500 index during the same period.